What's going on, everyone? Let's talk about smart money, what it means in investing and trading. So, smart money is investment made by knowledgeable and financial professionally. And there's also a term called dumb money, where it's someone who's new to investing or a retail investor. So, there is a difference, and now you know the terminologies. So, what is smart money? Smart money is the capital that is beginning controlled by institutional investors. So the money that's controlled by institutional like hedge funds, market management, central bank funds, and other financial professional, even people who's controlling over $100 million of assets, those are considered smart money, or even the people in executive position are considered smart money. Now, smart money was originally a gambling term referred to wagers made by gamblers by tracking records of success. So, pretty much what smart money does is tracks the market using the candlesticks and use it for a trading strategy. Now, I do not recommend this for any new investors, but I am going over this today and the basic of it so you can have an understanding, so you can have some concept of how to read a candlestick. Even though I do not go over it in my videos, I do know how to do them, and it is good to know them. Now, I don't recommend using them. I invest in long term. It's the best concept of investing. Now, let's go over what smart money is and understanding what smart money is. So, smart money is cash investment or wagers considered by experience or the people who knows it all in the industry. And these people usually have some insider information or more information than the retail investors. That's what you need to understand. Smart money investors, people who's considered smart money investors, are like Elon Musk, who has a large amount of wealth that can fluctuate the market, or even Warren Buffett, where they have information that's not relevant to us and they will make an investment based on their decision. Now, let's identify smart money. Now, there's a few following things you should know what smart money is, and smart money investing had different strategies, but large transition is the smart money investor often make large amount of money transfer or investment into a company, and that will cause the volume to go up, and people do pay attention to these type of transactions. Insider buying is another smart money indication where people inside the company will start buying the stocks in the company because they are relevant to information that the average retail investor isn't. Now remember, these are information that we are not relevant to until we know this has happened. This is the reason why it's harder to do smart money investing, but it's not impossible. It just takes a lot of time, and I don't recommend it for anyone who's trying to do a investing for beginners. Now, another one is placing with strong growth potential. So I give you an example. Let's say for healthcare or technology, there's a new technology that come out that the government requires the hospital to purchase so they can get their benefits. So you'll see a big uptake in these purchases. And so investors will move towards these companies to invest in them because they're going to have a good growth potential due to the requirements of what they are needing to do. Then another one is like oil and gas. Let's say an oil and gas company has to spend $1 billion in going green incentive. So the government forces it. Now people are looking for long-term companies that will help them achieve that goal. This is the what you call placing strong growth potential. And a lot of times, if you don't do a lot of research, you won't understand this and you won't even know what's going on. So this is where the strong growth potential is based off your expertise. Now, long-term investment horizon is one of those smart money moves where you'll see Warren Buffett or someone say, hey, in long term, See's Candy is going to be doing great. I'm going to buy this company. So now a lot of people are buying them due to their dividend or they're making a lot of money. and that's a long-term investment thinking over the horizon. A fundamental analysis of smart money typically conduct a fundamental analysis of the company, including financial statements, management team, and market trends. I do some fundamental analysis. I don't do in depth just because I'm not gonna spend all day trying to find all the information. And whatever's public available to me is fine. But some people try to go into the investor catalog and do all this other stuff to see what's going on with them to make a better decision. That's just too much work for me. Now, how do people track smart money? They have this thing called CFTC filing, where big companies have to report to the com- Community Future Trade Commission. And you look at this and you make a decision to purchase. Volume analysis, if a lot of people starting to purchase them, and see if it's worth it. Insider trading reporting, where they report how many people insider purchasing. This is why I always look at the company, see what insiders are doing to give me a perspective if it should be purchased or shouldn't. 13F filing. Any institution over $100 million of assets has to report to this SEC, and people pay attention to this, say, hey, this company has $100 million, so maybe we should move towards this, or maybe we should go against them. And it's one of these things that you never really know. And then hedge fund database. Hedge funds spends millions and billions of dollars for these database and to analyze the stock market just so they can invest. So some people get access to these hedge fund databases, read them, and then make investment based off of that. And then the last thing people do smart money is based off news and market sentiment analysis, which I do. Will tell you if the companies go bullish or bearish, and some people base their day trading off of that. I don't recommend it. It's just so hard to base it off those low information, and I always recommend doing long-term investments. The scale of smart money. So the investor with large followings like Warren Buffett is considered a smart money investor, but the scale of their activity is not always taken into account. When the cash reserve for Warren Buffett, 25,000 to them is not a lot, and he might drop 25,000. Everyone will think, oh, this is a lot of money, and they'll jump into it. So please pay attention to the ratio of how much money they do. And that is pretty much what smart money is. And yeah, you can invest in smart money, use the strategies, follow all these smart people, follow the mutual funds, follow all these people. But at the end of the day, it's based on what you research. Now, that is the basic of what smart money is. I'll go into, hey, what are some of the examples of smart money? And one of them is called fair value gap. Now, this is a trading strategy that they call smart money. I don't know why they call smart money. It's just people with the trading strategy. And just pay attention to the screen and you'll see these examples. So fair value gap. The imbalance between buyers and sellers, the market leaves a gap where the price are filled and return to rebalance order. Don't worry, I'll give you an example. What is it? So this is an example of a bullish fair value gap. So fair value gap is just a gap where the valuation is going to show bullish or bearish. And if you look at the candlesticks, you can see, oh, this is going to be bullish, this is going to be bearish, and then this is going to be bullish, this is going to be bearish. Just by looking at these numbers, it's hard to read these candlesticks every day, but after a while you get used to it. And this is the indication of what it's going to look like. Now, and this is going to be the indication of bearish FVG. And you see that the candlesticks are overlapping, and that's how you know it's invalid. And this is where you call valid bearish. So pretty much the theory on it is there's a large spike and there's a gap. And that's a time to either purchase or sell just because you're going to get a fair valuation of your stock. Now let's talk about inversion fair value gap. Inversion fair value gap is a significant movement shift in the market indication of a reversal. So meaning that you're going to see a big bullish run or a big bearish run. And here's the example of what a bullish IFG VG looks like and a bearish IFG. Now, if you look at this chart, you'll see the bearish candlesticks and the price resistance. And this is all by looking at these candlesticks, which you're going to have to spend time. Please pause the video and look at these if you need a better understanding. And then here is a bearish one. You'll see the candlestick on the left side, overlap the right side, and it validates the bearish IFG where it's going to be dropping in price. Now here's the overall chart that you can see that you have a big bullish run off a IFG, and you just have to look at the candlesticks. I personally don't like doing all this stuff just because I like to invest long term, and this is more of gambling towards, in my opinion. Now let's talk about order block. OB is an area with outstanding amount of limit orders waiting to be executed. It means that, hey, I got a lot of orders. When is it going to be executed? And you look at the candlestick. These are all on the charts, and you can see them. Now, this is more for day traders. So here's what the bullish OB looks like, and this is what a bearish OB looks like. Now, a bullish order block will have these indication, impulse, bullish move, and consolidation area. And you can see based off the candlesticks. And let's do the opposite. Let's look at the bearish order block. This is what, if you want to look at the bigger picture, this is what you can use the indication of a turnaround. So should you be using order blocks if you're going to be investing? I don't recommend it. It's still like gambling. And let's go into breaking block, BB. So breaking block is a valid order block indicating a shift in market trends, meaning that you should have a more upward trend or downward trend. So let's look at the candle chart and the explanation. You see the indication of the bullish BB and bearish BB, and it's just a reverse of each other. Look how the candles are lining up, and you can indicate, hey, this is when it's going to be bullish, and this is going to be the bearish breaking point. Now, here's a better example with some of the information, and take your time, look at it, and try to understand it. I can try to break it down to you, but you're going to have to get your own understanding. So if you look at this bearish block is formed, you see that it's formed on both sides, and the price reversal bearish block invalid candle has been closed. So you passed it, now it's good to be bullish. Same thing with the bearish. If you look at the bearish, you see the candlestick and it passed the breaking point. Now it's going to cause a drop, and that's the indication, hey, you should be selling and not try to hold on to stock, because you got an example of great loss. Now let's look at your long-term trading example of a BB block. Now this is the long-term trading example, and you can see the indication of it. Now let's look at the breaking structure. BOS is a trading concept used for price action trade confirmed for asset trend will trend to move in the current direction. And let's look how you can identify it. Here's the bullish BOS, and here's a bearish BOS. Now if you look at the bullish BOS, you see it just passed that breaking point and it just keeps going up. Now if here's the invalid, it fell to higher than low, and you'll see it, the invalid information. And this is the bearish BOS, and this is what it looks like. And let's look at the long term of it, and here you go. This is the breaking structure, and these are just some the basics of it. Now I recommend you do your due diligence and study a little bit more. I'm just gonna go over the basics. Like and subscribe to my video. That's all I got for you. I'm just gonna go over the basic of smart money and some basic of the candle reading, what they consider smart concept.